Class, good morning, good evening. Today's lesson is on IFRS on IAS 21, sorry. That is foreign currency, and that is what we'll be looking at. So we can start. The world is interconnected. We do business amongst ourselves. As long as you are actually doing business on planet Earth, you have, at some instances, you have no option but to buy goods from a country that uses a currency that is not yours. You may also acquire another company in a different country whose currency is different from yours. So how should we actually account foreign currency? Luckily, the International Accounting Standards Board has a standard to that effect that we can use to account for foreign currency. The standard is IAS 21, and let's see and hear what this standard is. Obviously, you have what you call functional currency and presentational currency, but let's look at the functional currency. What this functional currency is. It is a currency of the primary economic environment in which the entity operates. So the currency of the primary economic environment. For example, in Zambia, your currency most certainly would actually be a kwacha because it holds all primary activities are transacted in that currency, which is kwacha. So this is deemed to be where the entity generates and expends cash. You generate cash in which currency, you expend or spend cash in which currency. So if you are able to answer these two questions, we'll give you a framework of what currency is. Is it a presentational currency? Is it a functional currency? So management should consider the following factors in determining the functional currency. One, the currency that dominates the determination of the sales prices. Two, the currency that most influences operating costs. So which currency influence your operating costs? Three, the currency in which an entity's finances are denominated is also considered. So if an entity has transactions that are denominated in a currency other than its functional currency, then the amount will need to be translated into the functional currency before it's recorded within the general ledger. I guess you get it. If you have any questions, please write in the comment box and I'll be able to respond within a short period of time. So first, we'll look at individual company accounts. Then as we move forward, we'll start looking at group accounts because these are scenarios that we need to know what to do whenever we are faced with certain situations. So record the transaction at the exchange rate in place on the date the transaction occurs. If you are buying a product today on credit or whatever, you record it today at the ruling exchange rate. 2, monetary assets and liabilities are translated using the closing rate. And just know this. The closing rate at the reporting date with any gains or losses going through profit or loss. Non-monetary assets and liabilities are not translated at the reporting date unless carried at fair value. So non-monetary assets would be issues such as inventory. So you're not going to translate inventory at any rate or at the report date, for example. You are not going, because you're not going to revalue inventory. You're not going to do that. That's non-monetary. You can revalue payables, you can revalue interest-bearing debt, but you cannot revalue interest inventory. So unless carried at fair value, whereby translate at the rate when fair value was established. Basic principles, easy principles. So note that there is no specific guidance given as to where any exchange differences are recorded within profit or loss. But the general accepted practice is trading transactions. If they're trading transactions, they'll be under operating costs. If they're financing transactions, they'll be under financing costs. That's the best practice, but there's no guiding principle. So let's look at the example number 1. It reads, Matakala Incorporation has its functional currency as the kwacha. It trades with several suppliers overseas and bought goods costing 5 million Zimbabwean dollar on 1st December 2019. Matakala paid for the goods on 5th January 2020. Matakala's year end is 31st December. The exchange rates were as follows. 1st December 2019, 3.2 Zim per kwacha. 31st December 2019, 3.5 Zim per kwacha. And 10th January, 3.6 Zim per kwacha. Show how the transaction would be recorded in Matakala's. Show how the transaction would be recorded in Matakala's financial statement. We can go to Excel. So we'll start with 1st December 2019. What was the rate? How much was the rate? 3.2. What was the cost in Zimbabwean dollars? 500,000 Zim dollar. So when they are buying these goods and they are being bought on credit, which account was debited? So we know that purchases account received. Which account was credited? Payables account was giving. So how much would be recorded on that day of the transaction? We'll have 156,000. We'll have these numbers. Let me remove the decimals. This is what would happen on 1st December 2019. This is what will be recorded in the general ledger. Then at the end, what is going to happen? So on 31st December, guys, we are just revaluing. So we expect that payables will be revalued, right? But then first, we'll have to do this. Same thing. Copy. We'll need to know what it is. What was the exchange rate? The exchange rate on that 1st December was 3.5. So put 3.5. Now, so how much are we going to get if we revalue the payables, whatever? How much are we going to get? What we got as at today was at the 1st December to be 142. So in having 142 as meaning that payables will reduce to this level. So what does it mean? We'll have to credit, we have to debit payables. We'll have to debit payables. This is the journal that we're going to pass. So pass this journal or credit payables or debit payables, meaning we are reducing payables. In reducing payables, guys, what it means is that the difference, that same 13,393, it will go to P and L. So it will go to P and L. So with P and L, we'll take this, we'll credit. So it will increase the profit or to reduce the loss, depending what is there. Now, on, is it 15th January 2020, we are actually going to receive the cash. This is what we are told. What are we told? Matakala paid for the goods on 15th January 2020. So paid, not receiving, paid the goods. Again, we'll pick that. What was the rate? The rate went to 3.6. So this is what will be paid. So meaning the bank is going to be credited, right? So here, we are going to credit, we are going to debit payables. How much was payables? Payables was this. This is what we're going to debit to cancel whatever debt that we had. So we no longer owe the suppliers, not even a bit, but we are actually going to credit because we paid lower than or less than what we should have paid by 138. By, I don't know what difference is there. We should have actually paid 142, but we're actually paying 138. So it's again, and we'll go again to P and L. which is this minus that. 39. Then we are also going to credit bank with 138. So in case you're wondering, at any given time, when you're passing these journals, it should balance, because if you're debiting, this is the amount. If you're crediting, this will be the amount. It should always balance. Thank you so much for this segment. Wait for another segment. Thank you so much, and bye-bye.